Welcome back, everybody. It's currently Sunday, 25th of July. It's currently 8 a.m. European time. As always, we're going to do our weekly recap of gold. So, as you can see, this week started from Monday, July the 19th, up to Friday, July 23rd. From the economic events, we didn't have any particular specific report with high or medium impact. As you can see, the only impact was the jobless claims on Thursday. We had some medium impact on Friday. Did not actually have a lot of effect on gold. So let's start. As always, we start with our daily analysis um, that we always do on a daily basis. So on the 19th of July, we're starting the week after looking at this order block that was being created the previous week, previous one, but still respecting a bullish trend. We had some, of course, resistance at 1806, 1807 level, and after breaking the resistance, he actually acted as a support to then break out of this order block. On a higher time frame, this is just the hourly. On a higher time frame, we are in a sort of order block anyway, but we can spot these intraday trends. So, as a recap, gold is still in a bullish trend for the fundamental reasons outlined last week. In a recap, the inflation is high, Fed will not intervene soon, as per testimony of Powell. Tapering talks will need to wait for FOMC meeting in 2 weeks, which is next week from today. Last week, jobless claims were good, and we will see this week. So, at the end of the week, we saw a sort of head and shoulder pattern on the higher time frame. Shoulder, head, double head, last and right shoulder, and then going down. So what do we want to look for today? We want to look to reactions at key levels or even deeper, key level 1812 or deeper 18.7. We want to only to take cells below 1803 or the safer cell will be below the order block. So as you can see, no big news. Need to leave it there. So as you can see, this is the hourly time frame. As always, we're going to look at the 15-minute time frame. You see that very similar to the hourly time frame, the market structure, and we're going to see today on Monday what's going on. But this is Asian session. Going through London. As you can see, we see a break, a retest of 1812.5, and then going down to retest 1803. Already, this is happening pre-London. Still, at the time of the analysis, we didn't have it yet. It was not cold, of course. Let's see if on the 1 minute it's pretty clear. And so we see a break, price making lower highs, lower lows, retest of the level, and then drop of like 70 pips. Okay, but let's move on. This is no backtesting. This is our weekly recap. We see a reaction at the key level, 1803. We see a spike down, sellers in control, immediate reaction at 1795 key level. As you can see, very strong. This is the bottom of the order block. As we will say, you see, this is the reaction that we are expecting. Why? Because there's no fundamental reason yet for investors to be that optimistic about the dollar. So that's why price is not breaking below, because this is the make or break level where these are the previous lows that created the last highs So these are the price points that need to be broken in order to say, okay, there's a shift in market structure. So as you can see, buyers getting into control very strong. So we are now on Tuesday, the 20th. Let's see our daily analysis for the day. This is the cover. Okay, let me just fix it in a sec. Very good, very good. 20th of July. There's no fundamental reasons to sell gold on a high time frame. So we are still in a bullish intraday, even if we are in a big order block. There's no reason to be forever bullish. To say, okay, we are seeing many sell-off here, here, where sellers are getting into control, but they are not able to break important relevant price point, and investors are always on the sideline and ready to jump in on these price points. As you can see, headlines were crowded concerns over Delta, stock markets are weak, US $10 lost points, the volatility index is high. So we are looking for high risk, high reward buys. We want to see bounces at previous resistance that might have turned support, as you can see with this hourly candle, which is like 18, 16 ish level. Of course, safer buys above 1820, or during London we can see, as usually happens, deeper pullbacks to 1812 or to 18.6 to then continue up. Let's see the price, how it actually moved. Okay, we are seeing a ranging doing pre-London, doing London. Now we are getting to 1812.5 reaction, and then continuation up for like 70 pips, 80 pips more. So as you can see, the pullback that we were expecting to 1812 happened, and then we saw a break above 1820 and then continuation up till like 1824. There, as we can see, we are seeing this week, huge sell-off, and that's why we are in a high time frame range, because we are not with clearly only one side unbalanced, that is clearly buyers in control, sellers in control. That's why we are in a higher time frame range, exactly for this reason. So we saw spike up after the retest of 1812, pull back to 1812.5 key level, which was also the previous highs. So we found support here to continuation up. We don't need to get every single move every day. Our analysis is based on scalping, so this is way more than enough. We can enter here in 15-20 minutes. You already have your 1 to 3 profits above the order block, above 1820, as you can see. Break, retest, you can enter buys, and in 30 minutes you have 45 pips of profits. I'm not saying that it's that easy, but this is a nice double top created. Fuck you candle, as you can see, as you know, if you're in capital language, the last attempt to make new highs before melting. This is a melt, this is not a sell-off. As you can see, 1 hour dropped from 1823, 140 pips. So let's move on. Next day, we are the 21st. We spotted a double bottom created at 1806. We still have to see it here. Now when we're going to jump, we're going to see it. This is the first one. There's another one. We create another one doing Asian. We set double bottom, and we want to see continuation up or a squeeze after the wedge. So risky buys retest of 1806. This is not a key level. This is price sensitivity area, PSA. So we are spotting a wedge against 1806. Let's see now how it plays out. Okay, this is still the Asian, exactly this is the double bottom that we are referring to. You can see buyers are not able to make new highs and they are creating a sort of wedge. If we put here 18.6 on the hourly, it's more clear here. Let me just zoom in for you. Very good. If we put here yellow, very good, 18.6-ish. We put a trend line here. This is what we want to see. Okay. So what happened here? The squeeze from a wedge. This is very, very fast. This is not, but this is what we were looking for. We were looking for doing London a smaller range created and a breakout. If you go on the 1 minute here, you can see it. There's the breakout of the wedge. This is yesterday. It's not really clear on the 1 minute, to be completely honest with you, because there's no market, right? Okay. Yeah. Okay. So we saw this one, and then a breakout of the wedge on the 1 minute. Okay, we already. If I do this, let's go back a couple hours. This is the wedge. This is against the level, where it is failing to break below. We see then last touches, price continuing up, and then making the breakout move of 60 pips that we were expecting. Then, of course, as I told you, we are facing huge sells off here, 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 here. So that's why we are in a range. We go and retest again 1795. Failure to break, failure to close below. As you can see, instant rejection. And then we see a spike up going for then starting to range. Let's go to the next day, which is Thursday. This is on a higher time frame, and we are seeing a squeeze at 1795. Now this is on a higher time frame, so the previous highs, the very sell-off. We can have this scalp below, but today we have the jobless claims, so we have to be mindful of possible bad data. Okay, so we go on Thursday. Okay, as you can see, we are at 1795 key level. Doing London, we failed to break to close hourly candles below. We fail again. We see a double bottom created and then a spike up. Why this is this spike up? As you can see here, unemployment claims 419,000 versus a forecasted was 350. So it's 69 more than expected, which means short-term bullish impulse for gold. On the 1 minute, you see failure to close below 1795, failure to even travel below on the 1 minute, not only in the hourly candles. Last sort of vacuum candle on the bearish side. Here we have the news. Bam, spike up. Short-term dollar weakness. And as we said many times this week, sellers are not only on the sideline, they get in, they enter, jump in the market when buyers are making new highs. That's why, because on the higher time frame, we are bearish. So this is a correction. All this bullish intraday structure is a correction of this bearish impulsive. We are still bearish on the higher time frame, as you can see here. This is just a correction. That's why we see sellers, bears, getting always in from the sideline when you can see here, 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 again and again and again. They're not letting buyers print new highs, No, this is a correction. This is not, let's go, when did we see buyers in control? Here, see, come out of the range of the order block, bullish, small bearish, bullish, bearish, bullish. We get in the another order block, so we see sellers in control. Here, bullish, small bearish, bullish, small bearish, bullish, 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 small bearish, big bullish. So this is a clear trend. This is another block. This is a clear trend. This is a clear trend. This is a clear uptrend. This is a clear correction. This is a clear downtrend. Bearish, small bullish, bearish, small bullish, bearish, small bullish, bearish, melting down. Here is another block. Here, this is an uptrend. Big bullish, small bearish, big bullish, small bearish, small bullish. Here you see some exhaustion of the buyers, but here buyers in control immediately. It took 1, 2, 3, 4, 5, 6, 7, 8, 15 hours to make this movement. 1, 2, in 3 hours has been corrected by sellers. It took 1, 2, 3, 4, 5, 6, 7 hours to make this move. 3 hours be corrected. That's it. That it is. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 20 hours to make this move. 1 hour gets corrected. So that's it. So this is how we have to look at the markets objectively. So let's go on Friday, last day of the week. So this is, if we go to see the recap, we see 1795. Let's go on the hourly time frame. And we get the reaction at the key level and the entry on the news. not the cleanest. Indeed, it is. So Friday, we don't have we have to always be careful, as we saw through all the weeks, the whole week. We might be aware and be careful about profit taking by buyers and sellers jumping in. You see, this is not a clear trend. Look, how many red, how many blue. It's not a clear trend. So we're going to play between key levels, not something that I want to spend much time on. So starts a Friday, and we're going to run it till the end. See, bouncing from 1803, continuation up above 1807, 1806, huge sell-off. This is the profit taking, you can see, but let's see, let's dip here on the 15-minute candles. We see finally breaking below. Sellers are able to jumping in at previous highs to make a break below 1895, but not a single hourly candle closed below. As you can see, even if it has been this aggressive, there has been an equally aggressive pullback, came down and then came up another 40 pips, not a single hourly candle closed below. So as you can see, open here, travel to 1789. Let's go on the 1 minute. Instantly corrected. This is something that we saw previously, and I will show you now where and why these are maybe not even in this sell right now on Friday, but this aggressive push was expected. Give me a sec. Here I am. So you see this is the analysis of the 22nd of July. Wedge, high time frame wedge creating against 1795, big resistance level. Safe sells. Of course, this is safe sells below. Be aware of the aggressive pullback gold gives after more aggressive break of support key level. Buy scalps of 30-40 pips might be possible at rejection of key level. Tuck tuck. As you can see, the previous day. Why did I was saying this? Because I went back and I saw that on the 29th of June, we had the same situation, and I can go and show you really quickly. Was here against 72.95. Here, the dollar had more strength, but as you can see, we created a wedge against 1772.5. We had a meltdown impulsive and an immediate 40 pips bounce up. So why I was seeing this? Because I saw history that might have been repeated. That's what happened. Wedge, spec down, intraday closures below, key level, immediate. This one at the time it was bearish. Bam, immediately closed up 80 pips like this, 64 to 72.5. So I was trying to see the same here. Not saying was not sure that it would happen, but why not? As you can see, this is the first time that price is breaking below 1795 with no fundamental reasons. There's no Fed coming in saying we are raising interest rates. There's no Fed coming in saying we are tapering soon. The unemployment rate is good. No, it's just technicals. Just selling is control, overshooting of sellers. Bam. No, we are not ready. Buyers jump in. They're not away. They're on the sidelines, ready to jump in when they want their price. They want to buy here. Of course, 1803. Take profit. It's Friday. Mm, We don't have to worry too much about this. Okay, so let's finish off this week and the weekly recap with it. And we're done. So hope you guys enjoyed this weekly recap as well. See you next time.